Today's lesson is extremely important because I'm going to show you why a lot of beginners or even experienced traders who refuse to listen to good advices are losing money in the market. So, just to explain to you the concept, like where does your brain tell you that it's the best idea to take a trade when we look at this chart? Well, like your brain tells you that, okay, it would be a really good idea to take this trade here and just go all the way up, or take this trade here and just trade it all the way down, or take trade somewhere here and go all the way up. So this is somehow like what your brain tricks you to think, like, hey, I want to catch like these all-time lows, all-time highs, and these really big moves. Well, I mean, it does seem very attractive, but the problem is that you never know. Like when you look in the hindsight, like you're like, oh yeah, I would totally pick that. Like your brain somehow tricks you that for some reason you would be able to catch that this is the low and this is a good time to buy Bitcoin. But when it's actually happening, you never know. You never know if it's not going to go any lower or if it's going to go higher. And how it usually ends up is probably, let me show you here, in a recent year, not even a recent year, it's like recent 6 months. Like, so we have this up move. And of course, like the beginner traders, they're like, oh, there's going to be the Bitcoin crash and I want to catch like the big move down, but they never know when is that going to come. So they're going to be at 20,000. They will be like, oh, let me try to short in here. Let me try because the crash is going to come here. The big move is going to come from 20,000. Boom, didn't happen. Then they're going to try again at 40,000. Like, yeah, it's going to crash at 40,000. They try to go short here. They're happy for a while in here, but then boom, it goes against them. And again, like once again, they will try to catch another at like 50,000, and it just like doesn't happen. They're like, oh, the crash is going to happen in here, and it doesn't happen. Boom, they're out of their position. They're losing money because they're trading against the trend. And what we want to do as experienced traders that actually want to make money long term is always follow the trend. So if we see that the price is constantly rising, we're looking at the places where to follow the trend. So in these kind of conditions, we always want to look for places where we want to trade up. We don't want to be looking for the reversal of the trend of the next big move. We just follow what is given to us, and it goes in both directions. For example, so if the price goes lower, then we follow it lower. We don't want to be waiting for this like one big reversal move that happened in here and try to catch it here, and it just never happens. We want to follow the trend. Like, okay, we're going down, so let me try to go low from here. We're going down, so let me short here. And this is how you're going to be making money, by following the trend. It is like the same logic. Like if you want to take a train in some direction, you usually go and sit on the train in that direction, not in the opposite direction, and hoping that the opposite direction train is going to turn around. And, or I would even say that that's like standing in front of the train and trying to turn it around yourself. So now let me teach you how to figure out when the trend is in place and how to trade in direction of the trend. Now we're going to learn method number 1, how to determine the trend. You can just use your common sense. Like you can just look at this and say like, okay, recently it's going up. So this is very simple method, but it has, let me zoom down to some smaller time frame. It has some up and downs because it's very easy, for example, to see something like that and say like, yeah, it's going up, I can see that. But then you're already starts going down and When there's money on the line, you sort of start to question yourself, like, is it still going up? Is it going down? I don't know. And what is really important is that each one of us has something that is called equity threshold. And that is the amount of money which is just too big for us to make non-clouded decisions, non-clouded judgment decisions. So in the same way, like each one of us could walk on a like, let's say, a sidewalk which is like 1 meter wide when the sidewalk is on the ground. But try walking on the same sidewalk when it's like 1 kilometer in the air. So it's still like the same sidewalk, and it's 1 meter wide in both cases. But when it's like 1 kilometer in the air, I suppose you will question your walking skills a little bit, when a lot of is in sake. So in the same way, it goes with the trend setting. So this will be something that you will be using maybe in like advanced parts when you will in couple of years. I just wanted to start with that because it could be made really simple. But now let me teach you some exact methods how to set a trend so that there's not too much discretion or insecurity in that. Okay, so let's go and see method number 2. And method number 2 is called higher highs and higher lows in case of an uptrend, or lower highs and lower lows. So what does that actually mean? You can see that the market is sort of like moving in sort of like waves. You have these like impulsion, correction, impulsion, correction. That's something that you should have been already studying from the previous lessons. Impulsion, correction. So it doesn't go up like this mostly, but it goes up like it more looks like more like this, like almost like a staircase, or that's how it looks like. So we're going to use that to determine the trend. And now let's learn how to determine the uptrend using the higher high and higher lows. So let's say we start at this point. So this is a low. This is the first high. This is second low. And as you can see, this low is higher than this low. And then we have another high, another impulsion, which ends somewhere here, which is also higher than the previous high. Then we get another low, which is higher than the previous low, and so on and so on. We get another high, which is higher than this high. We get a higher low. We get a higher high, higher low, higher high, higher low. Then we get this high, higher low as well. And now we should get higher high. So this sort of tells us that the uptrend ended. So this technique of having like higher highs and higher lows tells us that we are in the uptrend. So as soon as you can see like, oh, here you start to be like, you have a low and high, and then you have another low, which is higher. So you're like, okay, this might be turning into uptrend. You don't know yet, but this kind of confirms it. This confirms that, okay, like we reached higher low and higher high, so we are in the uptrend. So from this point, you will be trading in this direction. And it works vice versa. When you see that we have a lower high compared to this one, this one is higher, lower, and then we have this low, and we have a lower low, and another lower high compared to this one, and another lower low. So this means that now we might be in a downtrend. Let me also like show it to you in some previous examples, but let me just show it to you. So once again, we have a high and a low. So this is like the first one. Then we have lower high because it's lower than the previous, and we get lower low because it's lower than this one. Another lower high, another lower low, and so on and so on. So this tells us that we are in the downtrend. Once again, this skill is a little bit discretionary, and there will be another things that will help you determine this. But please keep like practicing. Keep practicing like this lower high, lower lows. There, just keep in mind, like I said in previous, like there are gonna be uncertain times, like you're gonna be, is this really high? Is this low? You have to sort of like find your balance, like learn based on experience and what you see on the chart, like which highs and which lows are usually significant ones. So that you don't try to, oh, this is high, this is low, this is high, this is low, this is, we're not at high. No, it's just like take some really significant parts from the beginning to always keep it simple. Don't try to do like the micro analysis of every red or green candle. Just keep it single, just keep it to the really major swings. And this is the way how you're going to determine the trend using higher high and higher lows or lower lows and lower highs. The method number 3 is something you already know from the previous lesson. It's the impulsive and corrective move. So I already mentioned it in the first lesson. You probably didn't know what I was talking about if you're new to trading. But now the knowledge from the previous lesson will come in handy because we can very simply set the trend by looking at the impulsive moves that happened and assume that the impulsive moves are always setting the trend. So just look like, okay, impulsion in up direction, impulsion in up direction, impulsion in direction of up, and one more in here. So when this happens, like we are mostly in an uptrend and when we're not in impulsion, like when we're in a corrective stage, we want to assume that we will continue in the direction of the previous impulsive move. In this way, we would catch like 1, 2, 3, 4 really good trades. And then we would lose one, which is completely okay, because we will learn in later stages how losing a trade doesn't mean anything. We can see that we have impulsion, correction in the bearish direction. So this could tell us that the trend might be turning around into a downtrend because we have the impulsions in other direction. So this is method number 3. And method number 4 is using indicators. Like, for example, I'm going to show you, just for the purpose of this lesson, this indicator, which is called Smooth Heikin-Ashi Candles version 1. Let me show you step by step how I got there. So you go here on this FX, indicators and strategies, you click on there, and then you start typing, and you already have this indicator. So you will click on this, actually shows you the Heikin-Ashi candles, and you can see that when it's green, we're mostly in uptrend, and when it's red, in downtrend. We are in downtrend. And you can see how beautifully this is aligned. Like we use the impulsion to determine that we are in the uptrend. The indicator is green, so it tells us we are in the uptrend. And now the indicator is red, and we were also able to use the technique of impulsion correction moves to determine that we're in downtrend as well. So these are aligned. And we could also use, like, I don't have it on the chart anymore, but you can also look that also our technique of higher lows and higher highs, this is the part where we are drawing it before as well, also confirms that we are in the uptrend. So you can see how beautifully this is all aligned. But I would suggest that you focus on one technique at the time, because sometimes they can be, very rarely, they can be contradictory. So just focus on one technique at a time, practice that technique to set the trend, and then move to others, more advanced ones. So now you know how to determine the trend, but as you're going to be practicing, you will surely find situations like this. Like when there is pretty much the same low over and over again. Like you can see in here, like the lows are the same and the highs are also pretty much the same. And yeah, also another low here. So what does this mean? Well, there are two stages of the markets. One of the stage is a trending market, which we just learn how to identify. And when we have same lows and same highs for a while, so we need two lows and two highs to confirm that this is going on. We are in the sideways ranging market or so-called range. So we can mark something like this. And this is very important to learn how to identify as well, because we will use different strategies to trade in the trend and different strategies to trade in the ranging market like this when we have same highs, same lows. Let me show you one more example. This would be another example of ranging market. So sometimes there is a period of indecision when there is no trend. So the market goes just up, down, without printing any new highs or any new lows. So this is the sideways market. It's pretty much, you could say that it's a correction in the market. Like you could say that the ranging or sideways market is also a correction. And yes, it is. But it's very important to learn how to identify these, because let me repeat that you will use completely different strategies on the sideways market than on the ranging market. And it's just like my experience is that usually led to like a big loss of time when I was trying to use the same strategy when I was in the trend or when I was in the range. And by learning how to identify these two very different stages of the market, you will learn how to profit in each one of them. Because sometimes the strategies, the indicators are exactly opposite how we use them in trending market compared to how we use them in ranging market. Like the same signal, which means to buy in a ranging market, will mean to sell or to go low in the trending market. And one more advice, we already learned in the previous lessons about the time frames. So if you want to be trading in a 5-minute time frame, so the 5-minute time frame like you can see in here, then you set the trend on a time frame which is one higher. And we will use, let me just clean these, from 3 minutes, 5 minutes, 1 hour, 3 hour, 4 hours, daily and weekly. So we will use these time frames. Have a look at these. These are the ones that we will be using. And when you want to trade from 5-minute time frame, then you will click on 1 hour time frame. And you can see this is where we've been doing the marks. And you will use the 1 hour time frame to set the trend. You can see that you can hear that my cat agrees as well. He's also setting the trends using the higher time frame. And so if you want to trade the 5-minute time frame, you will use the technique of, let's say, Heikin-Ashi candles, smooth Heikin-Ashi candles on 1 hour chart. And you will see like, okay, so if you, let's say we want to be trading in here or in here, let's make it for simplicity. Let's make it very recent. So you want to be trading somewhere here on 5-minute chart. Let me mark it on the chart. Here, where's the black vertical line? You want to trade there on 5-minute chart. And you will be wondering like, okay, so what direction should I be trading where this line is? And because on a 5-minute chart, it looks like we might be getting an uptrend or it looks like we might be in the range, doesn't it? But you always rely on the higher time frame, on the one time frame up to set the trend. So basically, if you use minute time frames like 3, 5, you will look at 1 hour. If you're using 1 hour time frame to trade, then you will look on 3 hour or 4 hour. And if you're using 3 hour or 4 hour to trade, you will look on the daily or weekly to set the trend. It's actually very simple. You just have to practice, and when you're done practicing, you have to practice some more. That's it from today's lesson, and we can move on to another one.